Hi everyone, Marv Eisen from Timeless Dollar, and I want to give a recap of Friday's actions, Friday, October 8th. Prior to the market opening at 8:30 on Friday, here's what happened. Tremendous degree of volatility developed because of this. At 8:30 on Friday, the non-farm payroll report came in, and the numbers were well below the projected 500,000 new jobs that were expected to be added to the economy. This caused a great deal of volatility beginning at 8:30, just when that report was released. Prior to that report, prices were headed into our trading zone delineated by these Taylor book method numbers that I send out. At any rate, throughout the rest of the morning, and I'm going to get rid of this drawing here so you can see it more clearly. Throughout the rest of the morning, bulls and bears went into a tug of war with a high degree of volatility, no discernible trend. The very long shadows on the candles that indicated the tug of war between bulls and bears, and it wasn't a market that you should be trading, or if you did, you probably lost money, and very quickly at that. At any rate, during the day, a pattern could be discerned, and that was right here, market top being at around 43.98. There was no trade in the morning that I could tell. In the afternoon at about 1:30, with the stochastics at an oversold level, the market bottomed out and then rose up to 43.96 before closing out the day at 43.83. Now, the market essentially was down for the day because of the non-farm payrolls report. Now Monday, Columbus Day, the markets are open. The stock market is open. Bond markets are closed, but the stock market is open. And I send out the Taylor's book method numbers to my students each day before the market opens, and I'll divulge them here. For Monday, the three numbers to keep in mind are market close at 43.83, and then support and resistance at 43.96 and 44.15. So if you plan on trading Monday, mark off your chart with these support and resistance numbers. These are calculated, of course. No guarantee, certainly no guarantee that the market will trade anywhere within this trading zone. But the Taylor book method has been used for over 50 years, and it's reliable, and I trust it. Certainly, this is not a made-up line, 43.83. It's an important line. The three important numbers, 43.83, 43.96, 44.15. Oh, and I want to call one more thing to your attention. I've made a number of videos on gaps or windows, that a window always closes. Now, I want to go to the S&P market, the daily S&P market, just my chart so that you can see it. Okay, here's the S&P on a daily basis. Look what happened here on October 6th. This window opened and it has not yet been closed. So while the market might have good news and rise to good news on Monday or sometime during this week, we have a significant gap down to 43.61. So keep that in mind, because the E-minis and the micro E-minis follow the S&P. The E-minis and micro E-minis are artificial constructs. They follow the S&P. At some point in time, this window will be closed. So keep that in mind. But I've given you the numbers for Monday. Trade safe. Have a good day on Monday. And if you're looking for some insight on how to trade the E-mini futures contract, check out my course at timelessdollar.com. This is Marv Eisen. Thanks for watching. See you next time.